Hi everyone, welcome to eToro's YouTube channel. Hit subscribe now in case you forget. We have loads of cool content coming up, and I think it's going to be really useful regardless of where you live in the world and how much you know about investing. My name's Connor, and today is 5 years since I bought my first ever stock. If you stick around for a couple of minutes, I'll tell you the 3 huge reasons why I began investing in stocks. We'll quickly cover my strategy and finally how much money I've made to give you an idea of what your savings could be like in 5 years' time if you started investing today. Also, there's one huge bonus tip towards the end that 95% of people probably don't even know about, so stay tuned. But for now, just get comfortable or don't. Like I said, this is literally going to take around 5 minutes. I mean, you could probably hold a plank for this entire video. Grab a chair. Back in 2016, I remember I was working late in the office, and during part of my long commute home, it started pouring with rain. I had no umbrella, and so I took shelter in Starbucks, and I sat there tired and waiting for the rain to stop, thinking there's got to be a better way to make money. I started looking into different options, and honestly, what I learned that evening changed my entire life. So here is everything that you need to know about how I started investing. So then why is it so important to invest? Well, the first thing that blew me away that night, other than the wind, was that it turns out you don't even have to work to earn money. In fact, the majority of the world's richest people don't earn their money through labor or a job like most of us, but instead they earn their money through capital. Essentially, if you have money and more importantly, you know how to invest it, then you can make that money work for you so you don't have to. This is known as passive income, and the most common examples of this are things like high interest bank accounts, real estate, and the stock market. And after tons of research on all 3, the stock market was clearly the best option for me, and here's why. Firstly then, you need to consider inflation, and whether you choose the stock market or not, this is the terrifying reason that you need to find a way to grow your money, because inflation increases the price of most things in our life, from public transport to rent, food and entertainment. I remember when a bus in London used to cost 50p, the latest smartphone never cost more than £200, and perhaps most depressingly, chocolate bars used to be double the size and half the price. All of these things and more increase in price by roughly 3% per year. So if you're not growing your savings by this amount, then your money is shrinking, and that means that your current lifestyle may soon be unaffordable. That might sound scary, as I know bank accounts rarely offer 3% and it's so hard to get a deposit and invest in property, yet thankfully the stock market does have a track record of growing by around 10% per year since 1926, and that's the first reason that I decided to invest in stocks over anything else. Next up is cost. Unlike the huge amount you need for a property or perhaps to launch a business, you can start investing in stocks with as little as you like. This wasn't always the case. In fact, in the past, you couldn't get access to the stock market unless you had tens or hundreds of thousands of pounds, because you needed a broker to manually perform each trade on your behalf. However, thanks to technology and a number of investment apps such as eToro, which is the platform that I use, you can now get access to the market with as little as $50. There's a link to the eToro app in the description, so you know exactly where to get started if you decide after this video that you do want to start investing. Come on, I mean, how accessible can you get? Anyway, back to the third reason why I chose to invest in the stock market, and that's because it doesn't have to take up any of your time. In fact, other than a bank account, which we've discussed doesn't meet my needs, other passive income streams such as building a self-sustainable business require a lot more time and skill, and it's a lot easier to just own tiny fractions of already successful businesses and let a more experienced management team grow your investment, which is exactly what you're getting when you invest in stocks. So once you've decided if the stock market is right for you, you need to decide on a strategy. There's no one size fits all, but it's quite a simple exercise, and you just need to consider the following things. Firstly, what is your long-term financial goal and when do you want to achieve it by? Secondly, the amount of risk that you're willing to take. And finally, how much time you want to commit to learning and trading the market. For now, we'll use my situation as an example, but we'll cover this in more detail along with how to pick and get signed up to a brokerage before ultimately choosing and buying your first stock in upcoming videos here on this channel. So remember, hit subscribe and stay tuned for that. Back to how I decided on my strategy then. In terms of my long-term financial goal, really simply, I just wanted to grow my savings to a point where I could start to live off the interest. That figure will be different for everybody depending depending on things like where you live and your lifestyle, but I decided that 30k per year would be my goal, and that may or may not be enough, but it was my best guess when I started investing at 23. The stock market has grown by an average of 10% per year over the past century, therefore to make 30k per year without needing to work, my financial goal was quite simply 300k. So then after I'd set my financial goal at £300,000 and after learning the stock market had an average return of 10% per year, my next step was to set up a compound interest calculator, and from here you type in how much money you could afford to start investing with, along with how much you can save or add monthly, and you'll get an idea of when you'll reach your financial goal based on growing your investment 10% per year. My situation was that I had £10,000 to start with, and I planned to save another £350 per month. And at that rate, if I were to invest in something low risk like the S&P 500, which has an average return of 10% per year, then I could reach my financial goal in around 20 years time. That's not bad at all, but personally I wanted to get there quicker, and I was willing to take a bit more risk and commit some time to try and speed that up. So rather than invest in an index fund, I did decide to pick up a book and learn on how to invest and start researching the stock market to try and find companies that would outperform something like the S&P 500. I hope that if I put in a couple hours per day, then I might be able to achieve closer to 20% per year, which would be double what you can expect from the S&P 500. And at that rate, my compound interest calculator was showing me that I could reach my financial goal of 300k in less than 13 years, and that's 7 years quicker than if I chose to invest in the S&P 500, essentially meaning that by putting in a few extra hours per week, I was hoping to gain an additional 7 years of financial freedom in my future. Learning to invest in the stock market has so far been very lucrative for me personally. However, there is also another very important decision that I made when I started investing in 2016. And this is that bonus tip that I mentioned right at the beginning of the video, and it's something that most people just aren't aware of, don't know about, and it's actually responsible for £54,000. So where did that other 54k come from? Well, it's actually thanks to a feature on the trading platform eToro, where you can choose to let your portfolio automatically copy the investment decisions of top investors around the world. Therefore, you get the benefits of active trading without having to put in any of the time. You don't have to read tons of books and research or sit at a computer for multiple hours a day. Yet, if you copy me on eToro, you can actually grow your savings exactly the same speed as I do. Not only is this feature great for copying some of the best traders in the world, but if you consistently outperform the market, then other users on the platform could one day start to copy your investments, and although it's free for them, eToro will start to pay you based on how many copiers you have. So after 2 years on the platform, my investments were doing so well that other people began to copy me, and because of this, eToro has paid me £54,000. Getting copiers on the platform was never part of my plan. I personally just like the app. It's super low cost. However, the fact that eToro allows beginners to copy world-class traders and then rewards those experienced investors makes it a no-brainer when deciding which platform to start investing on. If you want to learn how to pick stocks and outperform the market yourself, then subscribe to this channel. Stay tuned for upcoming videos packed full of tips on how to do just that. Hopefully this video has shown you how important it is to invest and how much you can potentially make over the next 5 years if you decide to invest in the stock market. Thanks for watching. Remember, hit subscribe and like the video. You can also leave a comment, let us know what kind of content you want to see. But my name's Connor, I'll see you next time, and remember, your money should be working for you and not the other way around.